Right then, watch list creation for October the 26th, Thursday, day 2 in the 3-day cycle, the latter part of the week, building up order flow for tomorrow. And we'll take a look at what opportunities there might be with regards to order flow for the day ahead. So just a quick glance at the US dollar to start things off. So the US dollar, there's no real reason for it to be any lower. It's trending high for the third um, for the third straight day, and we've got the October highs in iShot around 107.35. Not necessarily going to make it there today, but it's on that trend, that trajectory towards it. In terms of the Fed, nothing's really changed, so the sentiment remains with the economy still running hot. Further tightening is required as the rest of the world slips towards recession, if it's not already in it, and plenty of safe haven risks that would be supporting the US dollar as well. So with that aside, let's crack on with what events are coming up. We've got the ECB. In terms of the ECB, nothing really there expected to shift away from current sentiment. Rates are expected to remain steady. And then Lagarde is likely to emphasize growing downside risks following a pretty downbeat September the 14th press conference. Right, other risks on the calendar will have the continuing jobless claims and durable goods, and we'll also have the first look at gross domestic product. So those are the risks and those are the times to be aware of. Okay, so cracking on with the technical analysis. So we'll start with the currencies and commodities, gold and oil, silver, and we'll leave the indices until a bit later towards the Wall Street Open. So staying with the dollar then, bullish on this. We've only really got, this is the second day of breakout traders in terms of the dollar. It wasn't until yesterday, that we broke the initial balance highs. So I'd expect there to be momentum in this move. We've broken Tuesday's highs in the dollar, and we're treading water around the highs of the prior week and last month. So we're coming in to take on last month's highs. So it looks as though that the price of this dollar index, weighed heavily against the euro, is on that northerly trajectory, but it will likely be decided on the outcome of the ECB coming up within the hour, and thereafter a series of important news events. So the bias is tilted to the upside, but as part of the 3-day cycle, we've got 1, 2, we're in the third day of longs, not breakout traders. I'm talking about just a 3-day cycle. We've low of the week and we're at the high of the week. So we've had 1, 2, we're on the third day of longs in the market. So that may well continue, but we wouldn't be surprised if it doesn't and pulls back in to the longs. It's on the third day, and often you can find a correction on the third day. But note also that we're on the second day of the latter part of the week. So Wednesday, day 1, Tuesday, day 2, Friday, day 3. So we could be setting up for a Friday, day 3 sell-off. And that would be the scenario that we'd look for tomorrow if we get an extension and stay up high today. Now, the ATR for the Dixie is around about 62, and we've done pretty much half of that. 62 would bring us up towards 107, so that's the target, 107 on the day, if the bulls manage to commit through the highs of the day and last month's highs. So if we stack up above there, then the outlook is bullish up towards 107. So that's weighing across the board against gold, against the euro. The indexes would struggle in such an environment and so forth. So let's crack on with looking at those. Right, first of all then, so the euro, it's 1 to 3 day, 3 days worth of shorts in the market. It's a pretty narrow range day on Wednesday. That may give rise to an explosive day today. The average true range over the past 21 days is around about 72 pips. That takes us all the way down to last week's lows and beyond towards last month's lows if we get a day 3 continuation. If we were to get a day 3 correction, likely depending on the outcome of the data today, then note that the closing price is a target on the upside, around about 105, call it 105.70 on a break of that. And then if that were to be the case, we'll be flipping the ATR to the other side, depending where we come off of. But we'd be looking right up back in towards the highs of Wednesday's sell-off. So a strong short squeeze could be on the cards in that respect. Having said that, the bias is bearish, while on the front side of that trend line and sticking with the status quo for a target towards last week's lows down in 105. And we are in the second day of breakouts. So we broke out of Tuesday's low on Wednesday, and we've broken Wednesday's low today, Thursday. So that may well continue into Friday. And just looking at the longer term charts here, this weekly chart, it's interesting that the price came up to this support area and was rejected. So this was a familiar area of support and has been rejected from that area, 107-ish. So just worth noting that perhaps that's a strong level of resistance. So I'm categorizing this as a continuation trade to the downside until we get on the backside of that trend, and then we can categorize it thereafter as day 3 of the 3-day cycle for a potential squeeze. Now the same can be said for sterling. 1, 2, 3, day 3. It could be put into the category of a day 3 squeeze to the upside, a short squeeze. But keep in mind that we are tucked in below the last week's lows. We've broken those last week's lows. So if this continues to act as resistance, and if the dollar remains firm, then this could be a downside continuation trade as well. Now, if we were to continue in that southerly trajectory, then on the daily chart here, we've got the low, the October, the 4th low down at 120.37. And then pulling out to the weekly chart, we can see that this is potentially an area of support that we're heading into. And I'd expect that to act as so. That gave rise to an almighty move up, breaking resistance. So we'd expect it to decelerate. If this were to drop into here, we'd expect some deceleration, some demand coming through. So I'd expect firm support in a test of 120. Right, so for the time being, we can stick this into a downside continuation possibility, prospect, but bear in mind this weekly low resistance at 120.90, and keeping an eye also on the highs that we're starting to print in the New York session. So perhaps this could be our resistance area for the day ahead. In and around here, would be looking to trade from. Now, in terms of the average true range for any given day, comes in at about 95 pips. And we've done very little of that so far. So if we do get a continuation, we could be targeting down towards 120.20. Right, we're over here on dollar yen now. We've got these highs. When was that put in? Way back a year ago. 151.94, so towards 152. So that's in eye shot. Longer term, we're front side of that bullish trend. Again, there's little reason to think that the dollar can't continue higher. So we're on that northerly trajectory, longer term. Now, nearer term, on the day, on the week itself, it's interesting that we've come up. This is day 3 of the 3-day cycle. And we've got 1, 2. This is the second day of breakout traders since Tuesday. And what's interesting is that we've had this sharp spike to the downside. Now, I just walked in through the door myself. No idea what that is. Potential intervention. This is a fresh high, or perhaps some risk-off event that hasn't jumped out at me. Literally walked in through the door, so I've no idea. Plenty of geopolitical stuff out there, which would be a supporting factor for both the dollar and the yen. But as we know, the dollar yen can give us almighty spikes out of nowhere at any given time. So I'm just currently looking into that through the wires. But meanwhile, we can crack on with the technicals. And technically, I'm getting someone saying that it looks like the Bank of Japan. Technically, that would have wiped out longs. Okay, so that may well have done the groundwork for us to continue higher. But we're going to be cautious about wanting to buy this if the Bank of Japan are on standby, calling up the dealing rooms and keeping us nervous, trying to long dollar yen. So for that reason alone, I'm not going to be interested in dollar yen today. Or if there's a juicy setup, then small risk allocation to this pair and all other yen pairs. And what we'll do is we'll put this into the 3-day cycle category to remind ourselves that although we're looking for a continuation to the upside in the dollar, there's every chance that this could give us some trouble going long, and we'll be looking for corrections to the downside on day 3 of the 3-day cycle. So worth sticking a note on our chart. Bank of Japan risk. Right, moving on. Right, dollar CAD daily chart here. We've got the high from last year again, 139.86. So we're looking to target up there towards the 140 mark. We're front side of this bullish trend. We've come up pretty high off that breakout, but again, no reason really for it to be bearish at the moment. First port of call is this high over here, and we'll see how we get on. So targeting at least 138.70 with stops above, while we continue to be front side of this bullish trend. And then we'll have support potentially at this high if things were to flip over for whatever reason. Keeping our data for today, and then the swing low down there. All right, so for dollar CAD, we've had on Tuesday, we broke the initial balance high. So day 1 longs, day 2 longs. We're on the 3rd day of breaking highs per day. So 1, 2, 3. We are also day 3 in the 3-day cycle, but we are day 2 of Monday, Tuesday, Friday. we're finding support at yesterday's closing price, and we've broken yesterday's highs. Again, while the dollar remains biased bullish, there's no reason to be thinking that this is going to correct immediately just because we're on day 3 of breakout traders, but it could do. But we are currently front side of the bullish trend technically until we break the low of the day. That comes in at 137.87. Now we had a strong move in London, pulled away from trap traders up high. So those breakout traders got stopped out. So perhaps we've cleared that out and we are setting up for a continuation to the upside. While we're front side, that would be the thesis. While the dollar remains firm, commodity currencies are on the back foot. We'll get to oil later on in this watch list creation. But for the time being, we shall put this in the bullish continuation list. Now, while we're in this continuation list, I want to emphasize that if the data proves otherwise and we start breaking structures, then obviously we are flipping the script on the continuation thesis and we're looking for day 3 counter trend opportunities from levels, being the highs of the day, the closing prices, the highs of the prior day as our foundations for shorting or going long, technically shorting the dollar. Right, as I get through this watch list, we're fast approaching this key data, so I'll try and get a move on. So in that regard, let's just fly through these. So dollar Swiss, continuation trade bullish, plenty of ATR still to go. We've got last week's highs as a target. And we are up high on the day. We're in the second day of breakout, so this could well continue up. And the ATR target is around about 90.20-ish. Right, the Aussie is a first red day. We came in very strongly down, breaking through last week's lows, and we are day 2 of the breakout, having broken out of Tuesday's low. Day 1, day 2, and we're up in the closing price or thereabouts, and Friday's closing price. This could all well be a resistance area with shorts coming into the market and targeting longs on the day for a continuation to the downside, potentially if the dollar remains firm. So we've got 63 pips worth of ATR. We've probably done we've done 40 odd pips of that, so quite a bit to go to the downside. If we were to continue lower, we're looking at a target of 62.50-ish. Now, if this were to flip over, we would be looking for a move to target last month's lows again and up into the point of control of yesterday, taking out, continuing to take out the shorts from yesterday for a move up in towards the 63.30s. But we're putting this in a downside continuation bracket for the time being, depending on the outcome of the data. In fact, we'll pop it into the first red day category and taking priority. And we'll put the Kiwi in a continuation category to the downside. So favoring the Aussie in terms of first red day. And Aussie CAD, we have a first red day. Closing price as resistance and plenty to come down on the downside. 86.50 stands out to me as a point of interest. Running out of time, so Euro Aussie green day, and staying clear of yen pairs, and sterling Swiss is in the Fugazi. So that is a wrap, and let's turn to the data and see how the day unfolds.